And it's time for the next panel related to success factors of digital assets offering to happen. We have amazing speakers. They will introduce themselves. So practical professionals that are operating actual tokenization platforms and executing STOs will share based on their own practical successes and failures, what works and what don't works. So I am really excited to hear the actual best practices of the industry and waiting for the participants to join. Nice to see you all. Guys, I am sure we're going to have a killer discussion. So leaving you here, I am on the background if you need me. Have a great panel.
Thank you, Boris, for inviting us, and thank you to the rest of the panel for being here today. It's definitely a very distinguished set of people that have chosen to join this. And while the introduction sort of stated that we will look into what works and what doesn't work, I assume we might not be that binary, as I think one thing we can all start to agree on is that the market is still very young, and we have still yet to conclude the fixed formula for successful STOs. Nonetheless, we will of course discuss the learnings that you guys have had so far, and before we dive into those, I would very much like you to give a brief introduction to yourselves and your companies. I know that, Roel, you have already introduced yourself in your earlier presentation, but in case somebody is late to the show, perhaps a quick recap would be fine. But let's start with you, Viktor. Could you please say a few words about yourself?
Hi, I'm very happy to be here today. So basically, I have started REINNO 3 years ago. It was a little bit different idea for a crypto bank, and we pivot to real estate tokenization and lending services. What we have done so far, we have tokenized more than 350 million worth of real estate. We have sold for the first month of operation on our platform more than 11 million worth of tokens through our marketplace. And what we are doing basically in the marketplace is we are offering 3 services. We are tokenizing real estate, we have marketplace for tokenized assets, and we do have lending solution that is accepting tokenized real estate as loan collateral, which is our main product. And it's pretty exciting. We do believe that it's going to provide significant amount of liquidity in the space. And that being said, I just want to keep that pretty high level as an introduction, not to overwhelm you, and to give you more during the panel. So I will let other guys present themselves as well.
Thanks, Viktor, and I'm sure we'll come back to some of the items that you already brought up. I'm happy to hand over to my fellow Dane, Claus Skaaning. Could you please introduce yourself to the audience?
Hello, Kristian. It's nice to be 2 Danes on the call here. You would almost imagine that there's a lot going on with tokenization in Denmark, but that's not the case.
I think we have the full Danish tokenization industry.
All of us are here on this call. Yeah. So thank you to Stobox also for inviting me here to this great conference. I'm actually a researcher by background. I have a PhD in computer science, specializing in AI technology, and I've also done one AI company before this one that I took to exit. It was a spin out of Hewlett Packard, and I'm a mentor and advisor for many university startups, both from researchers and students. But the last 3 years, I've been co-founder and CEO of DigiShares. We don't go directly to the market as REINNO does. We are rather a white label partner for real estate developers or real estate consultants that want to create their own sort of mini IPO system to finance and to manage real estate projects. So we operate under a white label business model, but we have a focus also on real estate. Thank you.
Excellent. Thank you, Claus. And finally, Roel, a recap of your merits.
Yeah, so I'm Roel, 25 years in financial services and technology, done quite a number of things. Currently, I'm the owner of a company called Business Creation, which is a so-called redevelopment company. So we actually fix businesses. But I'm here today as the chairman of Crypto Delta. So I have a special interest in technology. I've been in the blockchain industry for almost a decade now. And we've been seeing issues around trust, scaling, regulation, whatever is happening. And that's why we set up Crypto Delta Foundation in the Netherlands, together with all sorts of partners like PricewaterhouseCoopers, Allen Overy law firm, banks, smaller tech firms like Liquid, Valut, and others. And we've got a growing number of members as we speak. And I think we've seen all sorts of tokenization happening, but that's for later.
Thank you, and also allowing a bit of speaking time to myself, just to let the rest of you know who I am. My name is Kristian Sorensen. I have a sort of similar story to Roel, that I come from many years in payments, digital payments and digital financial services. It's been 20 years now, almost. 5 years ago, I co-founded Norfico as an independent advisory, consultancy, and communication firm with a dedicated focus on fintech. One of the pillars of the company was blockchain, and that got us involved in all sorts of projects. We turned our focus into asset tokenization after seeing with interest and fear the whole ICO wave coming, and we were also part of one of the first ICOs in Denmark, together with the largest law firm in Denmark, where we actually tried to suggest let's create a framework for proper regulated ICOs. But as we all know, the ICO market all but disappeared, and now we have the more mature and better regulated STO market. What we saw also was that this market needed a platform where we could gather all the industry players and also help build the bridge to the traditional financial services world. So a year and a half ago, we founded the Tokenizer as a media and information and platform for the tokenization industry. It has been run as a side project until now, but right now we're in the process of spinning the Tokenizer out into an independent company and actually fundraising for that as we speak. So with those introductions in place, I would like to go another brief round. You've all mentioned that you've actually done this. You've actually been part of issuing tokens. So could I ask you again, Viktor, just to say the assets that you've been tokenizing, is that mainly real estate, or you've been into other assets as well? And if you should name one dream asset that you would like to see tokenized, what would that be? So 2 questions for you each. I think you are muted, Viktor.
We're actually focused only on commercial real estate at this point, and we want to streamline this process with commercial real estate. We don't want to, tokenizing everything, because of course that we can, but we want to be able to tokenize an asset in a less than a week, let's say, if we do have all the documents in place. In order that to happen, we need a process, and that's why we decided to focus on particular assets and particular type of deals, not only the assets. So that being said, if we dream for an asset, it's gonna be Empire State Building, for example, that we want to tokenize, and it's been given for quite a while as an example of fractional ownership. So at some point, hopefully we're gonna tokenize it for real.
And what about you, Claus? You also been tokenizing in practice.
Yeah, we have done our own STO in Denmark actually, but for regulatory reasons, we have not yet issued tokens. We hope to be able to do that within a few months, but it depends on the regulator here, which is not fully under our control, unfortunately. Then we have 2 real estate STOs in the US who are scheduled to go live later in November. It's a white label partner, so we are not normally allowed to reveal the name. In addition to that, we have 6 STOs in Africa actually that are scheduled also for launch within 1 to 2 months. 3 of those are real estate related. The other 3 are later stage startup companies, seed and A rounds. Generally, 80% of the companies that we speak to are real estate related, and it's a mix of residential and commercial real estate. It's also a mix of new development projects and existing buildings and refinancing of existing projects. And it's also primarily company equity. So there's a company set up, an SPV that is set up to hold the property, and then we tokenize the company equity. Because the assumption the assumption is that this is what the investors prefer and this is what they are comfortable with. The dream asset, I don't really have a good guess on that, but I know what type of client I like to get into our shop, and that's definitely it's a partner that is a real estate developer with their own existing projects and an existing network that they can tap into for investors, and that understands, you could say, the value proposition provided by STOs.
Thank you, Claus. And Roel, the STOs you've been involved with directly or indirectly, which would you highlight there?
Yeah, so I think there have been numerous over time. As I said, the first STO I did was in 2017, and that was of a company. So basically on shares. It's been a while, but since then we touched, for example, tokenization of land. So not real estate, but actual land, property, solar energy, classic cars recently, a Rubens painting, startup funds. So quite a broad variety. And I honestly, I'm not a financial expert, and I can imagine only that everybody, there's so many other things you can tokenize that people would be interested in to be co-owner or have some of the capital and cash gains out of that. Now, if my dream, and I'm generally saying that at most of the conferences that I attend, so if it's not new for you, then sorry, but a dream is a dream, right? I'm a big believer that we need to change the world to become a better place. And one of the challenges that I've seen working in financial services industry is so-called debt. People having to get into debt and then do something, which is sort of the stick that is being applied. You go in debt, and if you don't make it, we slap you all over the place. So I would love my grandchildren to grow up, and when they without debt and without the stress of debt. So I'd love them to get born, and once they get born and registered, that we tokenize them for about 10 million euros, because that is the worth generally of an average person in their lifetime that they contribute, and that by each stage they can just consume part of that 10 million. Now we're issuing money anyway like crazy, so why not like that? So I would love that principle, that my grandchildren will just be born and have 10 million in the bank account and live their life.
That is certainly worth a discussion, tokenizing grandchildren. That's definitely an interesting aspect. But following up with you, Roel, since you've been in this industry for a while, and probably what already feels like a lifetime now, as things are progressing so fast. What is the current status of the industry, and what drives security tokens right now, and also compared to 2017 when you did your first STO?
Yeah, well, it's always difficult to speak for everybody, right? But what I see from a practical reason, I think from the entrepreneurial side, or the people with the assets, they, for example, if you own a big building, it's very difficult to sell a $500 million worth of real estate because there's limited buyers in the market, right? And if you could tokenize, you could fractionalize a number of these things and get part of the liquidity much faster. So let's say the need for speed of money, that's one side. The second thing I would see is that entrepreneurs are sort of in a situation where they say, it's really difficult to get lending with banks. There's been some distrust in that system since 2008. It's not necessarily got a lot better there with all the anti-money laundering challenges that are out there. So entrepreneurs are also seeking to, difficult with banks, but blended finance and locking in customers, and tokenization helps. So it's becomes a business strategy in certain areas. From an investor point of view, and that is, of course, needs to go hand in hand because it's a two-sided market. I think a lot of investors have been disappointed with, returns, and I don't mean the institutional investors necessarily, but retail investors, high net worth individuals. And there are now options, like, for example, in the Netherlands, you have about 750,000 SMEs, and it's the most profitable part of the Dutch economy. Yeah, and as an investor, you just don't have access. Scale-ups, a lot of investors only get access to scale-ups when you're a small investor, when they go IPO. And then the big 1,000 times sort of valuation is already gone, and you're in the public market space. So investors are looking to get access to asset classes that they generally couldn't get access to because they were not on the public stock markets or things like that, or available through funds. By the way, through funds, you need to have so much money, put in 50,000 at minimum, so there's certain barriers there as well. I think that's driven by the general need in this world to redistribute wealth. So the more people get access to the potential capital gains as well as monthly income, that will help in that respect. So that's a general market need, that they would probably discuss in Davos or places like that.
Thanks, Roel, for that overview. And one of the things that you mentioned, and basically all three of you have mentioned, that's the tokenization of real estate. That seems to be the sort of the most tangible, most immediate use case that drives most of the traffic. Claus, you said that it was 80% of what you of the requests you get are real estate related. So why do you think that that is the case, Claus? That it's real estate that drives the market right now?
I think there are several reasons for it. It's a big asset class. It may be the single largest asset class that is relevant for tokenization. It is huge. I think it's around $228 trillion globally, something like that. And only 7% of that is available for retail investors to invest into. And a lot of people would like to invest into it. So there is a gap to close. I think it's much bigger if you compare to other asset classes such as infrastructure, energy projects. Potentially equity crowdfunding could be bigger. But to me, real estate as an application of STOs is a better application than equity crowdfunding for startups. An STO in itself is a risky proposition. It's a new form of financing and sort of financing your project, and it's risky in itself. Why combine it with a startup that is also a potentially very risky investment? So to me, as an STO platform provider, it's nice to work with projects that are much more solid and stable and with a trusted yield year by year, so that we at least reduce the risk in one place. Finally, I would say we actually see a lot of interest from the real estate developers. There are many of them that are interested in being early adopters and being on the leading edge of technology, and there also is a good value proposition for them just outside the STO in itself. They have the chance to automate and digitize their processes, to be more easily able to manage a large investor group, to target new types of investors, and to get liquidity. Yeah. So for them, there is a really good value proposition if they understand it.
Yeah, and Viktor, it's hardly no surprise that you are all in favor of real estate tokenization, given the focus of your company. But can can you say a few words about why did you choose to focus on real estate tokenization?
So as Klaus said, this is a huge asset class that is not accessible for most of the retail investors, basically because of, especially when we're talking about commercial real estate, where the deals are pretty sizable in millions, they're pretty much above $5 million in the United States. I mean, the average deal. So, which makes it inaccessible to a lot of retail investors. And the good thing about real estate is that you have predictable income. So it's quite stable. Our focus as a company is also to real estate that is income producing and could provide immediate cash flow for the investors. That being said, I do believe that also there is one huge problem, and the problem is that it's super illiquid as an asset class. Mm-hmm. So basically, that's our main value proposition. It's actually to provide liquidity in that space, and we're designing different products down the road that's gonna help us build that. But yeah, that's the main problem. And how I realized that there is this problem with the liquidity basically was I spoke with different family offices, and they asked me, hey, can we tokenize our real estate, as it's quite illiquid, basically. And I started thinking about that, in the meanwhile. Yeah. But yeah, definitely I saw an opportunity, and we targeted this asset class.
Do you think there is also maybe even a psychological element to the fact that digitization and tokenization can be sort of abstract, but if we apply it to something very, very concrete like a real estate asset, it becomes easier for the market to understand? Is that a correct assumption, do you think?
Yeah, and also, when you're specialized in something, you understand their needs better. So basically, you're talking with only people that are in that space, either from both sides, as in investors and as real estate owners, so to say. And that being said, you're understanding better the market, their needs, and you're able to streamline the process that is going to work perfectly for those particular needs. And that's why we decided not to take any other type of projects. We've been asked for tokenizing art and equity and so on and so forth. But yeah, we don't want to take all of the deals on the market because we don't have a legal framework for them. We already have legal framework for real estate. We have all the documents, and we're able to tokenize pretty quickly. And as I mentioned, we prefer income-producing real estate. Even we can take other deals like constructions and development projects, but we prefer income.
Yeah. Yes. Roel, bringing you back in here in the discussion. Since I'm sure if I ask Klaus or Viktor if the technology is working and the platforms are ready, I think they will both say yes, since they are running platforms, both of them. Do you see any current technological challenges? And then I will follow up with regulatory challenges, but let's focus on technology first.
Well, look, I think technology has a huge capability. So generally the technology is ahead of regulation. Let's put it like that. But most importantly, technology needs to serve as a business case. For example, if you really want to transfer a piece of land from one person to another, generally you need a node So using a private blockchain to do that generally doesn't eliminate the notary. So you need to move it to a public blockchain to do things like that. So, you know, other people might say, yeah, use the private blockchain for trust, right? Whatever. And these sort of statements, I think we really need to be very aware about. Now, so technology, yes, it needs to serve the business case. That's most important, and that's generally cost saving for investors. Because if we can save the cost, we can put more smaller assets in situations like this to be tokenized. And as we all know, there's a few buildings of $1 billion, there's a little bit more, 500 million, there's even more of 100 million, and ultimately most buildings are, depending where you live, but general houses or apartments, and how could they actually be tokenized, or even smaller buildings like garage boxes, etc. Now, that is, I think, quite essential. But what we also have to be very careful about in this field, and maybe we can touch upon that later, because when we're talking about tokenizing real estate, there's this something huge happening in the current Corona market, and that is office buildings are empty. If you own them, who's going to pay them to turn them back into apartments where people live? Now, tokenization might be a way to get liquidity in, but at the same time, when it's already tokenized, is all the token holders are going to contribute to that refurbishing, right? So that's interesting to see what the rights are and what the obligations are of token holders. So that's where you get into the legal aspect. Hence, I made a comment earlier today about the Isle of Wight, the Isle of Man. By the way, I'm not against it for professional investors. They know what they're doing, right? But when you talk about retail investors, that means nothing to them. They just see an opportunity and they have no clue on what their rights are and what their obligations are in certain circumstances. And a lot of companies, unfortunately, especially in a longer time ago, didn't explain it because they didn't know themselves. So there was a good reason behind that. But now we're getting more educated. I think that is really the part of what's going on. Now, the most important thing currently that needs to happen in regulation, and I'm preaching, against an audience that knows this, is harmonization. So it's not so much new laws that I need to be invented, just harmonize the thing in Europe, harmonize the thing across North America, harmonize it in Asia, and then harmonize it around the world. Yeah, that would be the best thing to do. Now, there are a few areas from my perspective that I find a little worrying. If we get law to be technology dependent, then what if a new technology comes? We have to change the law again. And that is something, and at least in the past, that we've seen in the Netherlands to be very well organized, because the stock market was first launched in the Netherlands in the 1600s. We had a lot of experience with these things. And that meant that in those days, the laws are old. There was no technology then, so the laws are technology independent. So you could actually tokenize a company 5-6 years ago using blockchain technology. Nobody would care, right? Because it's just, you have a share and you issue it. That's fine. Yeah, nobody cared. A lot of other countries, they did care of the technology, and therefore they are in the news changing their laws. Now, I'm very curious to see what's going to happen with EU law, because that is actually suggesting that we need to move towards a sort of technology and law connection, which I'm not a big, not in favor of, because that will slow down innovation as such. Now, I'm not saying that it's a bad thing. I'm just saying slowing down innovation. Maybe that's good. We get a more, relaxed life. I'm not sure. But ultimately, these topics, harmonization, do the same thing across Europe, align it with North America, especially focus on investor protection. That is extremely important to be clear there, but also be clear to people issuing tokens what their responsibilities are to that matter. Secondly, I would prefer that it wouldn't be technology dependent, but it's more generically about rights and ownerships. I think that's where the framework of law is most valuable. And thirdly, I would really argue that in this field of regulation, we shouldn't have so many different. If I just look at Europe, we have the EU doing things, and in countries are things, and we've seen this. Kristian, you've been in the payment space. How did open banking, e-invoicing regulation, PSD regulation, it's all European frameworks, slightly differently interpreted in each country, right? That's not necessarily what we should to do. So harmonization and country by country giving input, but centralized regulation that will be deployed in a single way is extremely important to harmonize what we're doing. And I'm not a lawyer myself. Actually, I don't like law myself, but I've gotten involved throughout the years, and I know a lot of lawyers that see, okay, they want to make some money, but they also want to have a reasonable landscape that you don't have to worry about tiny details and write 2,000 pages contracts. They also prefer 50-page contracts that are easier to explain and understand. Yeah, because it's also fun to see progress. So that is, I think, where regulation shouldn't be a power play. And I sometimes have the feeling that if I now look at the European marketplace, France is screaming, Germany is screaming, and they want to set back the Netherlands. Yeah, because we can already do this for years. We don't have limitations. Just come to the Netherlands, tokenize whatever bloody thing you want to tokenize. It's fine. Yeah, investors know where they are. The rights are very clear. Yeah. However, other countries haven't got it. So you see that it's used a little bit as a political play. And that, well, that's the situation. So harmonization, no power play, and keep it technology independent as much as possible would be great assets to drive the market and the trust.
I would like to stay on the regulatory topic just a bit more. And Claus, you already talked about that you faced problems with the regulation not being ready in Denmark. Do you also vouch for Roel's vision here of a totally harmonized set of rules, or do you see that as the Visa guy inside Roel looking for one solution to cover the entire world? Or how do you see this?
It's a really interesting discussion, and actually I think that we come from the perspective of tokenizing company equity normally, which is shares. And to me, it's not this. The regulation around this is not harmonized in any way, even in the traditional financial system. And to me, it's actually not really necessary. I enjoyed reading the article in the Tokenizer a couple of days ago about comparing Liechtenstein regulation to Switzerland, where Liechtenstein has added a new entire layer discussing different types of tokens, including also security tokens. To me, that's the wrong approach. I think in most countries, just as in Denmark, you can add just maybe 1% extra regulation or change a few words in the existing regulation to cover the fact that we are just working with normal securities in a digital version. And then there may be a few twists because it's a token on a blockchain. But that would actually be my wish and my recommendation for regulators to try to do it in that way instead of inventing totally new regulation, trying to cover different types of tokens and different types of actors and so on, and introducing new types of licenses that you need to get in order to be an actor in the space and so forth. Many countries are doing that, and I think it's a mistake.
but if we look at the MiCA proposal out of the EU, and while it specifically mentions security tokens, it actually says that, security tokens are securities, and we have security regulation already in place.
Yeah, why not? Yeah.
Viktor, which jurisdiction are you operating under?
We're operating under U.S. security laws, and I could say that they're probably the best as far as what I know. Pretty much we are fitting the current security laws and regulations. We're complying with them, and we don't need something specific for tokenization that much. except we are using one amendment in Delaware, which is allowing us to issue digital representation of shares. Instead of paper certificates, we are offering digital certificates, and that's the only difference. What I do believe that need to be improved over time, and we are seeing it as a kind of as something that could be done better, is the way we're onboarding investors. For example, right now we are tokenizing our offerings under Regulation D, which is allowing us to onboard only accredited investors. And that's quite restrictive because we're not able to onboard everyone. So that's the main idea of tokenization, to provide ability to every investor, even the smallest, investor, to participate in bigger asset classes, which right now is not the case. However, a new amendment came just last week, which is basically increasing the amount of money that you can raise to a crowdfunding fundraise, which is allowing pretty much retail investors as well. And actually, for deals up to 5 million, we're gonna see that possible in a month and a half, in about a month, let's say. Yeah, that's going to be helpful. Still, it's not going to serve every project, but at least smaller tokenization projects are going to be done that way, I guess, and that's our goal as well. So basically, we do have the pretty much everything that is needed here. It just needs certain improvement as well. And one problem that basically I think it's more related to real estate, that probably could be exempted or improved, is that we are using more, as I mentioned, regulation that is based on fundraising for startups, and it's quite protective because of that. I do think that investing in real estate is not the same as investing in startup company in terms of risk. So that should be taken under consideration from the regulators, and probably we can have different terms as industry. That's my opinion.
Yeah. And actually, on the US regulation, even though you said that there are good regulation in place, or rather good exemptions in place, that the SEC has also announced just last week that they want to simplify these exemptions and consolidate them to make it more transparent and easier. Roel, I would like to just pick up on some things that Viktor said, that making this more accessible to everybody, and you also touched upon it yourself in initially talking about basically the democratization that we so much like to talk about when we talk about digital assets, making them available to everybody. But the laws are also there to protect the regular citizen. And what do you think we should do when it comes to making regular people understand what is needed or what's required? We talked about obligations, and you brought up yourself, what if something happens or needs to happen? There's a broken gas pipe that needs to be replaced in the commercial property, and there's no money to do it. Will the token holders be liable? And if they can't pay, who will then pay? That was a long question, I know. Sorry.
Well, yeah, it's a little bit of a long question. Shall I give a long answer?
In the interest of time, can we do medium?
Yeah, medium. Okay. So protect investors. Well, first of all, I think that starts with the one issuing the asset, right? As Viktor just mentioned, most investors know in the US what a Delaware entity looks like, because the rules are very simple, the obligations, it's transparent. And in 52 American states, everybody understands Delaware principles. So that means you have a huge market acting under single framework, legal framework. Great. awesome. Yeah, in Europe, we only have one single legal form that is actually standardized across. That's the cooperative, right? Each, like a limited entity in the Netherlands or an AB in Sweden or whatever, they all have slightly different aspects. That is not helpful for investors, because then it's invested under Swedish law, I need to investigate. If it's under French law, I need to understand so harmonization, again, I'm not saying the cooperative is ideal, but at least it's harmonized across Europe, right? So that helps in getting access to mass consumers and mass markets. Yeah, because they don't have the time, knowledge to educate themselves in so many different things. So that's one side of the equation, right? Then the question was how to deal with certain problems. And I think, for example, this is where you need to be very clear with it when you're investing in real estate. Well, do you actually own it? Because owning it means generally also that if I rent out a house that I own to somebody and the guy that lives there says, I'm paying the rent, but outside needs painting, you need to have money to pay for that because that's your general responsibility. So the contract that's out there, and generally in real estate, and Viktor or Claus, you know better than I do, but there's an operator that does the maintenance and support of the real estate. That's generally covered. Yeah, so there goes some fees that way, operating companies, and that works out. But now the bigger thing is, okay, so I actually have this office building, and guess what? The corona took out the complete office market space in certain areas of commercial real estate. Now I want to turn it into an apartment. Now it's completely tokenized. We have 5,000 token holders, and the cost is 10 million euros to refurbish the thing. Yeah, where's it coming from? Or are we going to end up with real estate property that can't be redeveloped because the 10,000 individual investors can't cough up all 1,000 or cannot agree what it should become? Should it be an apartment building? Should it be a single big house? I don't know, whatever. They have to agree and they have to invest. And that is, I think, there is the how do you say that? The refining from the business owners to go through all potential use cases when you set up an asset for investment. And that is quite essential to be ultimately thorough. And guess what? Then, you have authority financial markets and all sorts of consumer protection organizations that say, read the big print. This is an investment that the consumer organization has not reviewed. So hence you do it yourself. Or this is reviewed by us, and here in simple terms we explain you what it means for you. I think that's where sort of government organizations or regulatory bodies have a very important role, not so much in regulating the investment as well as informing investors about what it is. Now, I personally don't think everybody's going to get into this market. Yeah, we opened the stock markets in the 80s for big audiences in the 90s. I don't think 100% of the people are in the stock market, and not even 100% of the potential. I think in the Netherlands, directly or indirectly, 40% of the population is in the stock market via pension fund or directly, or owning something through their bank account or whatever it is. That is not the market. I think there's more potential in tokens, because a stock price is fixed at 50 or 70, and you can't buy a portion of that. Now that is really, I think, where we should look to protect investors, right? It's mass scale, it's transparency, and the one issuing the asset is really responsible about what's going on. And I personally know that some of potential real estate situations are at risk because of what's happening in the current real estate market, that they are looking for solutions to solve those problems.
Can I
please
something as I've been asked about what's going to happen if the building is not performing, who's going to provide capital and stuff like this if we already have tokenization in place. So basically, we do have options to solve this problem by just get creative in different ways. One of the options, and pretty much the easiest one, I could say, is to raise additional capital, which is going to dilute the current owners. But basically, we're going to issue new tokens, and we're going to dilute the current owners. But then, you're still going to have performing building in the end of the day. Of course, buildings are aging. Some buildings might need major repairs at some point, and that's the only way things could be done. Either they might decide to to raise capital from the current investor database. So whoever is not participating basically is going to be diluted proportionally. How that's done in regular partnership agreements today. Pretty much, if the company needs money and the shareholders are requested, are required to invest into this company, they're protecting their shares. If they don't want to participate, they're going to be diluted with the amount that is raised, and that's how it works. It's not 100% guaranteed that you're never gonna spend additional money if it's tokenized, like in the real world today. So pretty much the same situation.
No, I agree with you, Viktor, but the challenge is that mass retail audience is not properly informed about these sort of situations. Yeah, so it's in the small, fine printed detail. You read it, and people are just not educated about it. And I think the challenge with 10,000 holders, if you got to present a plan of what it's going to look like. Will it be an office? Will it be a house? Will it be an apartment complex? Right? And the decision making upfront needs to be clear that, for example, 2/3 of the votes are decision making, and that means that the other go along, right? So the whole tag along, drag along concept is not very well known in markets. And voting rights, you have advisory votes and you have formal votes for decision making, and you see that sometimes it's very untransparent for an investor. Do they have advisory voting rights, or is my vote actually worth something?
Yeah, so you're right. All these things pretty much, especially in the United States, when somebody's investing in tokenized real estate, they are getting the shareholding agreement up front. Of course, I guess most of the people are not going to go through the details and check, what are the rights that they're getting. But usually they are having pretty traditional rights, like investing in and be part of every other company. Shareholding agreements can vary, so that's very important to be said. It doesn't mean that they're gonna protect the investors. Some issuers might behave in a way that is kind of gonna hurt the investors in long term, and that's very important to be said.
Yeah, because there are interesting scams in real estate where people said, oh, you're going to get into this piece of real estate. They don't actually own it. They raise the money and then buy the real estate from a different venture that they already own at a top price. So they cash in themselves directly and leave the investors with a top price piece of real estate. Seen it happen. Right? So to anybody out there, if you ever invested in real estate, make sure that the company you buy tokens from or security assets already owns it. Yeah, and that there's a proper valuation report of what the rental income is or whatever that determines part of the valuation of that piece of real estate. But this is, again, here we're talking about education. Yeah, and I don't think the regulator can find a way to avoid stupid investment decisions, right? So we have to be really realistic. If you invest, to anybody out there, invest in something you understand. Don't do it because your brother or your neighbor said, oh, this is a great investment. Because by the time they say that, it's probably already way too late.
And actually, on that note, I would, also in the interest of time, I would like to step a little forward in the process and not just look at the security tokens when they're issued as an STO, but also when they become available on the secondary market. So basically, we have talked about liquidity so many times. how do we ensure that there are actually the liquidity of these tokens in a secondary market? Viktor, you want to go first on that?
Yeah, sure. So one thing that we very clearly said is that liquidity is not given, so it should be created. We need to work to create liquidity on the marketplace. So that being said, one of the ways that we want to provide liquidity is through our lending solution, basically, where people can use their tokens to borrow against them. In the commercial real estate market, as you know, that's our field. Most of the liquidity is coming actually from loans, than from buy and sell transactions.
Mm-hmm.
So that being said, the loans are a pretty important part of the liquidity process. However, we're gonna need also liquidity providers to start participating in that market, which are professional market makers and companies that are doing this for the regular stock market. Smaller retail investors, they just are part of this bigger picture, but they can't by itself provide the liquidity needed to say that the market is already liquid.
Mm-hmm.
So we're gonna need all these parties to get together to have potentially leverage and other sources, big players, institutional players, to start operating on this market. Liquidity providers, for sure, we're gonna need them, and that's where the liquidity is gonna come from. But yeah, I think, and I do believe that we're gonna see that pretty soon.
Okay, Claus, one thing is issuing the token, another thing is getting it out on the secondary market, which requires a link to the exchanges out there. I assume that there is both a technical challenge and a regulatory challenge to build that bridge. How do you see that happening?
Yeah, it's a good question. As I'm sure you know, there's only very few licensed secondary security token exchanges globally, and those that exist have very poor liquidity and haven't really proven their concept yet. Actually, I'm not convinced that they will be the solution to the liquidity in the security token space. When we have 10,000 real estate projects that are tokenized and 10,000 startups that are tokenized, how would you achieve liquidity in such a mess? Maybe you could get it from investment funds who are sort of investing broadly in that class, and then individual investors will invest into that. That might be a good solution. But for us, of course, we interact with the exchanges, and we have to be compatible with them. Many of our clients believe that it's important for them to be listed longer term with an exchange. Technically, it's not very complicated. We just have to use the same protocols as the exchanges are using, such as ERC 1400, for instance, which is a good widespread standard. And then we have to be able to share the whitelisting responsibility basically with the exchange, so that we can always update the share cap table with the correct information, even if shares or trades are completed on the exchange.
Mm-hmm.
So it's not so complicated on the technical side. On the legal side, it might be complicated because in some cases you may need to write a prospectus or something like that to get it listed. And it might also be quite expensive. So I think for most projects that we are looking at, it will not really be relevant for them to consider it.
Mm-hmm.
Well, what is really liquidity, right? If you have a primary market trading where you have 1,000 investors and they can offer by certain, for example, if you are in a company, generally there is the obligation to first offer your shares to your fellow shareholders, right? And if you utilize that, then it's offering, saying I'm willing to sell my shares for 10 euros. nobody responds or 100 people respond to buy your shares. Is that providing liquidity? I think liquidity is far away. So the promise of liquidity will take at least, from my perspective, 5 to 10 years from now in this market, because you need a lot of investors, you need a lot of assets, you need small assets, you need, you need a certain dynamic. And in certain markets, like, for example, bigger pieces of real estate, you don't necessarily want it, because you sell some transactions, let's say 10 a year, and that, you don't even immediately want that to determine the market price. Yeah, you want to report on the value that certain transaction has been done at, but it doesn't mean that the next person cannot pay less or more and have to pay the same price. So market making, especially in, I think, real estate or in certain areas where assets are quite big and large amounts are available, market making has a certain role to play to at least make sure that the price is not unrealistic. Yeah, especially in secondary markets. In primary market, I see it way more as a new feature for shareholders, for asset owners to sell to fellow asset owners.
Right. And basically, isn't there also a mentality thing in that equation? Because even though we democratize the investment in early stage startups, it still requires sort of a business angel mindset, whether you are a business angel for $10 or for $10 million, that, I buy into this startup in the hope that it will become the next Spotify or the next Klarna or what have you. You don't buy into this startup in the hope that in 2 months' time it's worth 20% more than what you bought it for. It is a long-term play when you tokenize equity in a startup, isn't it?
Yeah. Usually it is, but however, you just never know when you're gonna need some money for something else. So you might think that you can hold a certain asset for 10 years, but the idea of tokenization is basically to allow you to get out at early point. Like, for example, you might have a better opportunity 3 years after after your purchase of a piece of real estate, so to say, and you just need to be able to have an option to sell it. That's one of the main advantages that tokenized assets are actually offering. And doesn't matter if you're gonna execute this transaction in an exchange or through a private transaction. The idea of be able to do that, that's the key. So right now you're locked, and in most of the cases, especially in real estate transactions, you are not allowed to basically exit by yourself. So basically, you're waiting for the general partner to decide to sell the building after the 10 years of holding. But you might need cash, and you might have a great opportunity that you can miss because of that. So basically, even if you can transact with a fellow, or you can transact by finding somebody on the street that is willing to purchase your tokens, this is still a great benefit of having something tokenized. That's very important to mention.
Thank you, Viktor. And I can see we've come to the end of our session. Time flies in good company. I certainly had more questions I wanted to ask you. And while the next set of speakers are getting ready, perhaps if Boris will allow me, a very quick final question to each of you. And what would be the #1 advice that you would give to any company considering an STO? Basically, starting with you, Viktor, and we are out of time, so keep it to the point. Thank you.
The best advice is to actually prepare your first be, realistic about the outcome and the time frame. So when you're choosing companies, don't rely just, they're gonna make miracles. So if your offering is not good enough, you're not gonna have results. So basically, really depends on the underlying asset. The technology is just supporting this process of selling or fundraising. It's not the main thing. So you're not gonna raise for money for whatever you pick through tokenization. But if the asset is good, you're gonna have good results.
Okay, thank you. And Claus, your number one advice to companies considering an STO?
Yeah, I think they should consider whether an STO is a real value add for them and whether it really is a good option for them. So they should have some kind of special benefit out of doing an STO, which is just a different way to make a fundraise. So it should be important for them from maybe a technology perspective to be on the leading edge. They should have access to investors, and they should also have a legal clarification of whether it actually is compliant for them. And then come speak to us or someone else in the industry.
Thank you, Claus. And finally, you, Roel, what will your number one advice be?
Yeah, so two things actually for companies doing this. Either make sure an STO fits your strategy, or if you're doing an STO, adjust your company strategy to it. Yeah, so because it's not something you can just do. You need to be really in there. For investors, only invest in things you understand.
Okay, thank you. I think that concludes our session. I don't know, there might be. Oh, Boris, you are there. Are you ready for handing over to the next session? Or otherwise, I have plenty of questions I would like to ask this gentleman.
Oh, I assume you still have a few minutes because the next speaker is having the connection issues. The Token platform has its
its quirks. Yeah, I could see some chatter going on. So with that, I'm very happy to.
Yeah, I remember we had a few questions in the from the participants. You may ask them so far.
Yeah, exactly, and that is somewhat related to what we've seen on or what we discussed in relation to the secondary markets as well. Do you have any examples of well-performing tokens that have been issued and since traded? Do you have any success stories that either of you have seen in the market?
So far, the only token that is tradable, let's say, it's not the only one actually. There are a couple of tokens that are already tradable, previously been issued as an STOs on secondary markets. The only real estate token that is tradable is the Aspen coin, which is tradable on T0. Usually the exemption that we are using here in the United States not allowing us to immediately go to a secondary market. We are having 1 year holding period after the fundraise. So basically we're gonna see secondary market when the holding periods start expiring, and that's gonna be at least a year from now when we're gonna see more projects on secondary market. And the outcome is going to start, to be more visible. We're going to see some results there.
What about you, Claus? Have you seen a good example of somebody that's been incredibly successful and made a lot of money to their token holders?
No, and I think that's the main problem for the industry. I agree with the Aspen coin. I think that's maybe the only one. We lack some really visible success stories. We lack to sort of produce the overall proof of concept that we can actually provide value, I think, in general. But it's going to come really soon.
Yeah. What about you, Roel? Any besides the Aspen coin, do you have some successes that you've seen in the market?
Well, it depends what you define as success. I think I've seen a lot of happy investors in some tokenized green energy, but you know, it's like they offer 6% or something like that, and there people are happy with that, so that's fine. And you don't necessarily need to have the hundreds or thousands percent of growth as we've seen in the highly volatile crypto market. That's a different risk category as well. So from a security token perspective, I think there's plenty of companies that have delivered an excellent performance and have paid dividends on their tokens, for example. So I would define that as success. Of course, like in normal business, there's also companies who've done bad, didn't pay dividend, actually valuation's gone down. But that is part of what's going on. What I also find interesting is that when you look at these startup funds, incubator programs, you see, for example, in the Dutch government is setting up a fund for startups. I think it's 2 billion or something, and that would be great to tokenize that. And distribute that to the whole landscape of startups in the Netherlands. That would be quite interesting. But anyway, we still have to see what the return is. And I think also when you look at the stock market, and if you invested in Uber or something like that, you're maybe not particularly happy right now.
And there was a follow-up question, which I think I already know the answer to based on your answers to the first part, because I think what the question really was is what should I go out and buy? So I think we're looking for token tips here. I don't know if with all disclaimers of no investment advice given, any of you have any investment advice that you would share between friends here?
You mean from an investor standpoint?
Yeah. You're not obliged to answer this. You're fully okay if you decline.
I don't want to, kind of advertise or any investment opportunity at this point. I mean, people should decide by themselves what they feel good about, and what is fitting their risk standards. So if you're expecting some regular cash flow from their investment, like having 5-6% return per year, that's probably real estate is fitting for them. If they're expecting 100x return potentially from investing in startup, then definitely that's different ball games. So they need to analyze deals and find something that they do believe can achieve something like this. Real estate is not gonna keep them 100% for sure. So, but it's quite steady. So they need to decide by themselves what is fitting their investment strategy.
I can see that they're still struggling with the technicalities for the next speaker.
So maybe being a little bit provocative here, Kristian. I want to share something I invest in, right? But again, the same rules apply. I know what I'm doing. I understand this industry really well. So obviously it's something in financial services. Think some of you might know them, Celsius.network. So they are basically a crypto bank. Where you can stock crypto, you can lend dollars against your crypto as collateralized.
I was actually going to say the same.
Growing. Now, so I know Alex from his fundraising days in early on, and his previous work a little bit. And actually, so I got early and I bought a few Cell tokens just for the sake of it. And then I think it's now 4 months ago, just before summer, he did an equity STO on Celsius. And I actually bought a little bit there as well, because I feel that company, first of all, it's profitable. It came out of nowhere. It's profitable. It's over 2 billion in collateral right now. So you see that there are certain aspects in what Alex, obviously being a serial entrepreneur and have done multiple large companies from scratch. You see that there is something specific happening. the way I know financial services, right? You know, less fees, transparent offering, kickbacks to customers rather than stacking up profit and, you know, everything electronic, digitalizing, transparency on rates, you know, all that sort of good stuff that's happening.
Sorry for
And
interrupting
once you
you.
know, again, going back to my point.
The
Sorry,
next
Boris.
speaker at last managed to solve the technical challenges. It seemed the copying platform was lagging. So I thank you for the panel. You had a wonderful discussion, and I hope it really helps people not make the potential mistakes. You're all fantastic speakers. Thank you a lot.
Thank you very much for taking the time, and thank you for sticking around while we waited for the next speaker.